Hello traders, if I ask 10 people or 10 of you to show me how to draw supply and demand zones, I bet I will get 10 different drawings. In this video, I'm going to show you how best you can draw the supply and demand zones. And if this is something you would like to learn, make sure you watch to the end, because I'm going to share with you a trade I took using proper supply and demand zones. Okay, so let's go to the whiteboard. So today's video, we're looking at how to draw supply and demand zones. Okay, a lot of people have asked me in my Telegram the proper way to draw. Even someone dropped a comment in this last supply demand video I did, okay, on how to draw this properly. Okay, now this depends. It depends because there is no proper way of drawing. Let me just be frank with you. There's no a template that okay, this is what to do. No. Okay, instead you simply give yourself rules. Okay, rules will help you in whatever you do. Okay, if your rule says you're covering the entire candles, let that be your rules and you have to stick to it. If your rule says you're only covering the body, you are fair enough, follow your rules, because when you take 1,000 trades with your rule, you'll be surprised the kind of result you get. Okay, the main thing is execute. When it comes to your zones, supply and demand zones, execute. Now the question is, what are supply and demand zones? These are zones where buying and selling orders came into the market to push price to the intended direction. For example, supply zones are areas where where selling orders came in, orders to take the price lower came in to push this price to the downside. So that when price comes back to it, it is untested, it is unmitigated. So when price comes back to mitigate it, you can expect a reaction of it. Okay, and that is all about supply and demand. Demand zones, same thing, are zones where orders came in to push price to the upside, and as you can see, price came back in here and then we have a push. Okay, now the question now is, how do you draw your supply and demand zones? Okay, so the first one is weeks, week to week. Okay, week to week, and this is what I prefer anyway. The first one is week to week. For example, if you look at this area here, this supply zone, I can decide to take this week to this week. Okay, the week to week, like in this case. Now in week to week, in this case, I can decide to take the entire candle week to week, okay, of this particular candle as my demand zone. Okay, so that when price comes back into it, I can decide to engage. Okay, we have week to week, meaning on a single candle. Okay, week to week of a single in this case, week to week of a single candle. Okay, I can decide to use this entire candle, or I use this last one here. I can decide to use this as my demand zone. Why? One candle, week to week of that candle. Okay, price came in this case, it respected, it moved. Now in some cases you might not see, they might see price push lower, then moving out. It doesn't matter. Rules, remember I said rules. If this is your rule of marking out your demand zone, stick to it. Okay, so this week to week. Okay, now the other one is what? Body to body. That means, what I mean by body to body is simply open and close. Okay, marking the open open and close price. Okay, now in this case some people can decide to, you know, the open and the close. If this is what you go for, probably in form of refining, sure, but I will not consider this much. I will not be using this in my rule. This first one is there, but you can also use this, or the third one you can use closing and wicks. Okay, and this is also powerful. In this case, if you look at this here, we have this is closing, because this is a bullish push, close, then from the wick that starts it, that also is also your demand zones, okay, or supply zone. In this case, if you look at it on this particular chart, we have the close and the wick. Okay, the close, regardless the candle, the close and the wick. Okay, or if you are looking at the last bearish candle, you can down adjust this to this bearish candle and the wick, because this is the close of that candle. Okay, remember, is simply your rules. This supply and demand zone drawing is subjective. You can argue, it doesn't matter. Okay, if it works for you, whatever you use and it works for you, beautiful. I have no problem with that, and that should be part of your rules. Okay, so another one is to mark out the entire consolidation area, entire consolidation zones. Okay, now another one is to mark out the entire consolidation zones. Now let's go to a lower time frame to look at this. Let's see. In this case, this is the entire consolidation zone here. You can mark out this area as your supply zone. The entire consolidation zone here, you can mark out this area as your demand zone. The entire zone where the market consolidates or the market ranges, you can mark that out. This is used in a lower time frame. Okay, if you are to mark out the entire zones, that means you are going to a lower time frame, especially if you are looking at the 15 minutes. Okay, if you are looking at the 15-minute time frame, you can mark out the entire zone. Like in this case here, you can take a look at this. Okay, based on your analysis, if it's in conformity to the direction. You can look at this entire consolidation zones here. Okay, that is your supply zone. You can look at the entire consolidation zone here, this demand zone to push price. Now when you are using the entire consolidation zones, make sure you are using it on a lower time frame, because it doesn't make sense to go to the monthly, for example this monthly time frame, and the entire consolidation zone you mark it out. It takes time for price to even have a form of response, okay, to it. Like this entire place here, entire consolidation area, like this is the entire consolidation area for this. You have to be honest. Okay, this is where market consolidates before breaking to market on the higher time frame. No, the higher time frame is good to use a single candle or the wick, okay, of the candle, which will take me to the last one here. At least these are what I want to share with you. The last one, we have wicks. You can mark out just the wicks, okay, as your supply and demand zones. And these, I prefer using this on the higher time frame. Okay, when I'm marking out the higher time frame zones, especially the monthly, I like using just the wicks. For example, this particular movement here now, okay, I can decide to mark out this as my supply zone. Why? Because if this end up clearing this low, this candle low. Okay, then whenever price come back in here, I'll be looking to sell because that supply was responsible for taking out this demand. You can see this candle is a demand zone. Okay, now we are challenging it. If price takes it out, okay, takes that out, and probably take out this low as well, then if price come back to this point in the future, I'll just mark out the wick. That is my supply zone. Okay, wick of that candle. Okay, either this candle or the, I like you going for the highest. Okay, whichever way, you're marking just the wick. That is your supply zone. Because if you look at the lower time frame, that wick, you can see it's beginning to make sense. Okay, if we go to let's say 1 hour, what can we see there? Those are areas where price, you know, you can see we have a change of order flow in there. Just within that week, we have a change of order flow, and you can refine price to that. Price hasn't gotten there, so you can see here we have a strong change of order flow here. So when price comes here, this is the POI. You can refine it back down now to the 1 hour order block. Okay, so that when price comes back there in the future, you can be looking to sell. Okay, so let's quickly look at an example of a trade I took early June on USD card. Okay, now as at when I was looking at this, I noticed the daily time frame broke structure, and the origin was from here. After a chalk here, and we have this push to the upside. Now the demand zone to draw is either you can try to draw from here. There's nothing wrong from drawing the entire consolidation area, as I said, but in this case I prefer looking at the last candle, okay, that closes the imbalance. This is my demand zone, or you can call it an IPA. Okay, so when price started dropping in here, all I did was to go to the lower time frame to look for a confirmation to take the trade so that I can have a good RR trade, and we ended up targeting this. This was a target I showed my students that price will be heading in here because this I failed to break this low. Okay, and currently you can see we have the USD strong momentum. So now in the case of drawing, you can see I only drew from week to week. Okay, the week to week. So when price comes in here, I then go to the lower time frame to look for my entry. This video is not for that, because I will also make some videos on how to use demand and supply as your entry in the lower time frame, but that will be for another video. So what I'm trying to show you here is simple. Demand and supply is a very, very vital tool you can use in your trading, and to draw it, this is the way you draw it. You can refine, as I have refined here for this trade, and there's nothing wrong for you to even take the trade from the monthly daily time frame. There's nothing wrong at all. Some people I know when I started trading back then, I used to take from the daily. In fact, I prefer trading on the daily because it's clear, but as time goes on, I learned how to go deep into the lower time frame to get quick trades, and I can be off the market doing that. So this is a trade example, okay, and I believe you're going to use this to backtest, okay, to see if this demand and supply is something you can implement in your trading to make you a better trader. So those are the ways how I simply mark out my supply and demand zones. Let's take a look at it again and then round up this video. And if you don't even know supply and demand, make sure you check the link in the description. There are more videos on supply and demand on this channel. And by the way, if you like what I'm doing here, like, subscribe. You can join the VIP session by joining the YouTube membership. We have a whole lot of content for you in there. Okay, so the first one here is the week to week. That means a single candle, body to body, open and close of the price. You can mark that as a as the supply and demand zone. You can look for closing and the what wicks. The closing price is very important, okay, in trading. The closing price is very, very important. Now that closing price and the wick that leads to that closing price could be your supply zone, okay, or your demand zone, depending on the direction, okay. Then the entire consolidation zones, you can look at it, the entire consolidation zones as your supply and demand, and also your wick. And remember, all these are only valid if you incorporate it into your rule book, into your strategy. That okay, your strategy is I'm looking at just the wick, and when price gets there, you look for a way to look for confirmation and enter the trade. Now you want to understand liquidity, because when you apply this with liquidity, it gives you a powerful tool. So I'll see you here in the liquidity video.